This is The Wealth Puzzle with Michael Mansfield from the Lind Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Michael provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is The Wealth Puzzle with Michael Mansfield.
Hi, everyone. Welcome back to our podcast, The Wealth Puzzle with Michael Mansfield. And I'm Tana Pennington. Here at the Lind Group, we focus on retirement income planning. If you ever want to take a look at what your income is going to look like, the cash flow when you're in retirement, please give us a call. We can look at Social Security timing, Medicare. Have you considered what Medicare premiums are going to be like? Also, your taxes, being most tax efficient when you're drawing down from your accounts. Give us a call at 805-500-7035. Also, if you enjoy the content today, look at our website, thelindgroup.com. Lind is spelled L-Y-N-D.
Woohoo! Thanks. So, yeah, it's so funny. So everyone knows Tana lives out in Texas and I live in Cali. We're talking about switching that. I mean, maybe you come here and I go there. I don't know. But it was funny because I had to travel last week and Tana was here in the office. So
yes,
as usual, we did everything we could to avoid each other. I actually flew through Dallas where Tana lives, which was ironic. So I was out there technically for a moment while you were out here. So
trading spaces.
Yeah. So everything's bad as usual. Everything's terrible. We only come to bear bad news for everybody about misery and doom and gloom, because that is all that's being sold in the headlines, right? It's all
in the headlines, but
now I'm getting monkeypox.
No, you're not. No.
I'm just saying, I don't know. I mean, it doesn't end, Tana.
I know.
Where does it end?
I know. We just got to stay positive. Just hang in there. It's going to get good again.
And
I promise.
It's driving me crazy. Yeah. You know, it's fascinating, though. It's like, I always feel like a crazy person. You and I, we do this show. We talk a lot. For the last basically 6 months, all we've done is tried to bring data and information and the facts and the economics and said, everybody take a deep breath. This stuff isn't as bad as it is. And then the news is all horrible and the market keeps going down and everyone's saying Tana's crazy. Why does she keep saying all this stuff? And I'm like, I don't know. I just go along with her.
No.
This was all her idea. And, it's funny. I'll share it next week. But I found this. I came across this article when I was reading last night, and it was called Stagflation is Looming Wrong, economist says. And it's actually a really interesting article because what does it do? It actually uses data to make a case instead of a crisis. And that's what's amazing. With all the chaos, I feel like I sit here in my office. You all can't see me sitting here working. I feel like the gorilla at the Santa Barbara Zoo. You can come I got a window right here. You can come stand at it and watch me work if you want.
Gorilla in the zoo.
Have you ever been to the zoo? The gorilla stands there and the gorilla.
Yes. That was just a good visual.
The ball. Like is that I don't know.
You don't have enough hair on your head to be a gorilla.
If I maybe I would weigh less if I had to try to suck my food out of a ball. I don't know. Anyways, whatever. So anyways, no clue where we were going with that. I just got totally lost. Tana, you look like you're in a black hole. So it's always
funny. It's because it's gonna rain. It's
Tana
gonna rain
by a window, so you can always tell the weather in Texas.
Yeah,
it's
gonna rain, so it looks really dark up here. Sorry, I gotta work on my lighting.
What's fascinating is I'm sitting here. I listen to the news all day. I got CNBC and Investment News and Bloomberg and all this junk running on the TV. And for the last couple months, it's just negative. Everything's bad. And all of a sudden yesterday was the day where all the talking heads on the news weren't as negative. They were a little more optimistic. And it was funny. So basically what happened is Jamie Dimon, head dingling at JP Morgan came out and, had his conference call and was talking about recession, probably not. And it was funny because all of a sudden everybody started having that theme, like, oh, maybe things aren't as bad as we think. And then I came across this this article from an economist, and really what he did is he went through the strength of the consumer and all the economic data and all the things that we constantly beg everyone to be aware of, and says actually maybe things ain't as bad as we think. So I'll share that article next week. The reason I'm not sharing it now is because
we've got other stuff to cover.
Forced me to focus on some other data that we have.
Yes.
So Tana's freaking out about the stock market, as Tana does. And so she wanted us to do this. So I'm going to pop up some slides here, Tana. So Tana likes this slide. This is Tana's favorite slide. I don't know if that's true. I made that up, but I'm going to assume it's Tana's favorite slide. And the reason that this is an interesting slide is nobody can see it, right? You're watching this on your phone. You're listening to this on your podcast or whatever. I doubt a lot of you are sitting on a computer watching this.
Yeah, we can send you the slides though.
Perfect, right? Yeah. So anybody wants to email us, call us, text us, we will send you these slides so you can see them in better detail. But the slide I have on here, what it shows is it shows the S&P 500 as a chart. And it shows it since 1970. And then what they've done is they've overlaid a boatload of we'll say, current events. The Oklahoma City bombing, the Iraq invades Kuwait, the first cell phone sold, Reagan getting elected, the dirty war, the space race, all of these things, Saddam Hussein gets executed, U.S. invades Iraq, Facebook, all this stuff, right? And the whole premise of this is to show that, guess what? Stuff happens. I mean, here's one, 3 Mile Island nuclear accident. There's actually a documentary on Netflix. I just started watching. I watched the first piece of it. It's actually interesting.
Okay.
The everyone had mustaches back then. The observation. That's all that was.
All right. I feel like a lot of people have beards right now.
I feel that way too. And so it's funny you say that because I'm not a. People would be surprised to know this. I'm not the most social person, ironically, and that bugs me, right? So like when my hair starts growing out a little bit, the reason I don't like it is because everybody else has a beard,
right?
Like, I'm not trying to be like
be trendy.
I'm me. If I was trendy, I'd definitely be better looking and better dressed. So I don't know what's your favorite event on here, Tana? Probably Hurricane Katrina.
Well, not that I would ever want that to happen. No.
Oh, I don't know. I was just throwing that out there. Here, back in 2009, you can see the N1H1. Remember that? Swine flu?
Yeah.
Global pandemic. That seems like a nothing burger.
Yeah, no, that's a good point.
So, anyways, you like anything on here? What about what do you got? Well,
I like where Trump was elected.
Oh, where the market crashed? Yeah, look at that. Trump gets elected, stock market goes up like a missile. Now, Tana, were you in this business when Trump got elected? Were you old enough?
Yeah, I was old enough. Did
you know anybody, the clients that were concerned when Trump was getting elected about the stock market?
Oh, absolutely. Yes.
Isn't that amazing?
Yeah.
That of all things amazes me, right?
And they wanted to sell to cash.
I know a lot of people that did sell to cash. Yeah. We know a lot of people that wanted to sell to cash. We knew so many people that are panicking. And then if you look at this chart here on the S&P 500, Trump gets elected, the stock market just keeps up forever.
Looks great.
Anyways, the S&P since 1970 has averaged about 11%. If you put 10 grand in 1970, it's worth $2.2 million, even though you had to weather all of these chaotic things, the Russian war and the Feds and all the chaos and the confusions and the COVIDs and the blah, 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 blah. So anyways, I sounded fired up. Let's go to the next slide. I like the next slide better because it's not a current event. Once again, if you're watching this, you probably can't see it because you're watching this on your cell phone, so it's hard to see. So ask for it. I will describe what you're visually seeing because you probably see some colors. So what this shows is since 1980, the last 42 years, it shows there's little orange bars that shows during the year how much did the stock market go down, and then the blue side of it is where did the stock market finish. The whole point of this, everybody, is guess what? Things go up and go down, and we lose sight of that constantly. This year we won't talk about because who knows what's going to happen. But like last year, for example, 2021, I know it's hard to see here. We'll send you the slides. But the year ended up 27%. But guess what? Somewhere in mid-year, it went down 5%. Now, that's not that big of a deal. But 2020 with COVID, look, the market was down about 35%, but it finished up 16. Talk about a swing, right?
Yeah.
Here's 2018. The market finished the year down 6%. So that was a bummer. But guess what? Somewhere mid-year was down 20%. 6 ain't bad when it was down 20.
That's interesting, right?
I mean, 2016, it finished up 10, but somewhere mid-year it was down 11.
Right.
Another one, 2012, same thing. It finished up 13, but somewhere it was down 10%. 2011 was down almost 20%, finished the year flat. This can't be true. How can this be? No one even remembers any of these intra-year corrections. Right. I'm going to add them up. Let's pick a number. How about...
Well, we're just so caught in the moment, it's just hard to,
But it goes back to the previous slide, right? The previous slide is stuff happens constantly.
Exactly.
The news wants to act like these are all once in a lifetime. Right. This is all shocking and new. It's never been bad before.
Right. No, we've definitely had those corrections.
So here, I'm going to add up. I'm going to count. Let's do 10% or larger. How's that? Corrections for the year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. We could have picked a different number, but I didn't realize there'd be so many. So in the last 42 years, 24 out of those 42 years, what is that? That's about 60% of the time. There's over a 10% correction in any given year. Like, that's all the time, Tana.
Yeah.
These things happen all the time.
Right.
How does nobody remember that?
Yeah, no, it's a good point.
I mean, even the cataclysmic chaos of 08, which is hard to see on here, right? It shows the year ended down 38%, but at some point in the year it was down 50%.
Right.
Yeah, 38 sucks, but 50 is a lot worse.
Exactly. And then the year following, 2009.
It's incredible. Yeah. I mean, look at this. You go back to 87, the crash of 87. Somewhere in the year, the market was down 34%. It finished the year up 2%. The market is a wild little monster. But once again, going backwards to the previous slide, over periods of time, it goes up. And makes lots of money. Here's a different way to look at it. So this chart shows from 07. The reason 07 is on here, everybody, is guess what happened in 08? Does anybody remember?
The financial crisis.
Yeah. Crisis. I'm
yes.
like a ghost on your shoulder. I'm like, you say words. Hi. Behind you. The financial crisis, right? So everything was happy wappy right before that in 07, and then it all cratered out and came back. And so what's laid on here is different things. So we got stocks, gold, bonds. It's all the things that people think about, right? Inflation, home prices, cash, and oil. Tana, which one performed best at the end?
Stocks.
Is it that they probably also went down a lot in the beginning, but then still went up a lot? Yeah.
Yeah, no, absolutely. It's been
so that's the funny thing is all investing is based on time horizon. If you have time horizon, you can invest in stocks and you can be comfortable with those decisions. That's why when Tana and I build income plans, we don't use stocks to fund your income next month.
No, we do
use
not.
Stocks kind of on the back end of your plan for the long-term growth to hedge against inflation and taxes and living too long. But over periods of time, even with bad market cycles, guess what? Stocks do really well. Now, the problem is you got to pick your stocks. And that's where it's important. We are huge advocates of high quality names, companies that make lots and lots of money. We're not speculative investors that are just hoping we can catch some unicorns.
Right.
All right. This is Tana's favorite chart now. I changed my mind, and I only know that because we talked about this chart earlier, and you're like, I love this chart. So
I do. I think it's a good visual.
Once again, we know you can't see it because you're looking at this on your cell phone. But what this chart shows is it goes back to the 40s, and it maps every bull market, bear market, and recession. And so it's a cute little chart that shows it. And what it does is it shows the time periods of the bull markets, the bear markets, and then the total return of those time periods. And so I'll just give you the highlight reel right off the top here. And it says the average bull market lasted 4.4 years with an average total return of 155%. So when you catch a bull market, some are longer, right? We just had one from basically 09 to 2020. It was
Right.
11 years. So that was a
Yep.
long one. The market went up 400%. So that was
Wow.
awesome possum. But it really wasn't as good as the one in the 90s. You know, in the 90s, you had a run up for 12 years that
Oh,
was almost
wow.
600%.
You're right.
So, but the whole point is, on average, bull markets are long. Bear markets, on average, are 11 months long with an average total loss of about 32%. So, you know, you put that in context. I don't think we're in a long-term bear market right now. I think the market's turning around because I don't think the economics support that case. But let's just say we are in a bear market, right? Because that's what they're saying on the news. It's a bear market, it's all over, everything's bad, right? Well, if that's true, and we're looking at the averages, we've only been playing this game for 5 or 6 months. So on average, we're still on the short side of a bear market. And, you know, the NASDAQ was down, you know, about 30%, and the S&P was down about 18%, and the Dow was down about 15%. And so, you know, we're not quite there, but more or less we're kind of washing this thing out pretty quickly. And so, you know, there's a theme here, right? I mean, a lot of this even charting stuff that we're showing just reinforces that, look, we took this from different approaches, right? Bull and bear markets happen. Stocks and houses and inflation, all of these things perform differently in bonds. Events happen, right? You know, current events happen in the world. Markets go up and down every single year. I mean, there's a lot of data here. And the whole premise of all of this is to just remind everybody that even though this feels long, it feels scary, it feels concerning, it feels like this is the first time it's happening, because we deal with these emotions constantly.
Yeah.
It's not.
Absolutely.
This is just par for the course. This is very normal. It's very healthy. The things that are going on in the news are very scary, but at the end of the day, we all have one job to do, and that is to try to look at the actual data and information and cut out all the emotion. If you can try to eliminate the emotion, you'll be able to make good, informed decisions. Tana, she's an income planner. The way that she builds income plans is, once again, you don't put the risky assets on the front end of when you're using income. You put those on the back end for the growth, right?
Yes.
If you build a good, healthy income plan, guess what? You don't need to be scared of the stock market. You don't need to be, because your income is intact. And wealth is not how much money is in your account. Wealth is created by the income that you have to do the things that you want to do. And so if you have a good, healthy, normal income plan, then you're very dialed in. Also do a shout out to annuities right now. You know, everyone's all upset, but I'll tell you what, all of our clients that have annuities, you know, for whatever reason, I'm finally getting a lot of, oh man, I'm really glad I have that.
Yeah. Safety.
So it's funny how, you know, different asset classes do different things at different times. But, you know, when the stock market's going straight up, everyone wants stocks. When the stock market's going straight down, everyone's like, whew, glad I'm not in all stocks. Anyways, Tana, give us some food for thought. What do you got?
Food for thought?
Something deep.
Well, definitely give us a call. We can take a look at what your account is doing right now, how it is performing, maybe make some corrections, adjustments, visualize what retirement's going to look like. You really need to see how your cash is going to flow from the accounts that you have and be as tax efficient as possible. Also, have you looked into your Social Security timing? That's your foundation. You really need to build on the timing of Social Security and how that's going to play out. And there's different strategies that you can take advantage of that can really make a difference in the long run, especially because that is a tax efficient asset that you already have.
It's totally true. I don't mean to cut you off, but fun fact, they just announced the other day, they're thinking the next cost of living adjustment on Social Security is looking like 8.6%.
Wow. That is
do you imagine that in 2 years, Social Security will increase like 15%?
That's amazing.
It's crazy. Your Medicare will go up 40%.
Right. To counteract it.
Yeah, it's one of those funny
But that's something
things
to really think about as I'm working with clients right now. Is that's a big wake up call, is these Medicare Part B and D. So your medical and your prescription drug coverage, those premiums to Medicare are based on income. So if you go over that threshold, then you will pay more for your health insurance. And that can really, bite into your retirement savings.
Oh, it's called being patriotic. We appreciate you paying lots of taxes and
Right?
penalties to the government.
Oh, dear.
Well, anyways, if you got questions, give us a call, 805-500-7035. That's 805-500-7035. Or certainly go to our website, thelindgroup.com. Lind is LYND. Otherwise, I think we are good to go. I got to click over here and I got to click bye-bye.
Yeah.